Let's understand what is equity capital market, will also be known as ECMs in somewhere in the slides. So equity capital market is basically the companies which help a corporate or a particular company in raising capital through equities. So what are the different functions that will be done by this different companies in helping the another company to raise capital? The first is distribution and allocation of new issues. So there will be companies will be helping a particular organization, especially merchant bankers. They will be helping the companies with the distribution and allocation of new shares. Another important thing that the company, especially the merchant bankers, will be helping is with the IPOs. So they will make sure that the company's IPO is into a smooth process. That will also be taken care by the bankers who will be collecting the money on behalf of the company. So these are the different institutions which helps the company to participate into equity capital market, right from IPO to secondary market. So third is your special warrants is another thing that the companies organizations help in the ECMs. So warrant is just like an options. We'll be reading about the options when we cover the derivative market into this segment itself. So there in these warrants is something where which gives the right but not an obligation to buy or sell. So we'll be seeing about those. We'll be seeing about options and warrants in our future videos, in which we'll be covering into this segment only. So then there are organizations which helps the company with something called special warrants. Now, private placement, where the selected group of investors are helped by the company to ensure that they are the only people to whom these assets are allocated. So that's the special category. This also ensures that the company doesn't have to take risk to issue the shares or issue their stocks to the public, where there's a chances that it might be subscribed, it might not be subscribed. Hence some of the companies would like to go for private placement, and there are merchant bankers which help in equity capital market. They help the companies with the private placement part. Now, in addition to stocks, the capital market deals with derivative instruments also. So, derivative instruments like options, futures, forward contract, or swaps. So, we'll be seeing about this derivative market or these products in derivative market in our future slides. So it provides, basically the ECMs provide a mechanism for a business to raise initial capital or additional capital through the issuance of stock. So this ensures the company is being funded, the operations keep on running, and the company is profitable, which will basically maximize the wealth for the investors themselves. Right, so these are the there are various financial institutions which are responsible for underwriting the offerings, including the IPO, when company completes the process to go public. So right from the idea that let's go public to the money that has been received by the company to fund its operation, to grow, to expand, to maximize the wealth. So the entire equity capital market works in a synergy to ensure that the company is achieving its motive. And these companies will be, there will be additional companies like merchant bankers or investment bankers who will be helping these companies to grow. So ECMs do not offer services to individuals. Its sole function is to ensure that the company is raising capital either through IPO or through private placement or in any other ways. They ensure that the company gets its money either to start the operation or to expand its operation. So that's the sole purpose of the entire equity capital market. The next video will see how does the debt capital market works.